All right, Mark, this is just a couple charts to take a look at here. This is a monthly chart, bear in mind. And these numbers that I'm giving you are August numbers, so they're good through the entire month of August. And they reflect the September 10-year Treasury note futures, just so you know. So it is a futures-based chart. And you can see, let me actually back up to another. Um, this is a nearer term. We've had a series of buy signals the last 6 or 8 months. The first was above this formation at 122.10 and the secondarily above 125.08. These are support levels for the month of August. We could test 125.08. I don't think 122.10 is in reach, but just know that if we settle the month of August below 125.08, I think the market's probably indicated a good annual high because the next several months should then result in a test of this 122.10 formation. Both of these are dropping at the same rate. And so if we close August below 125.08, 122.10 becomes kind of a 1 to 3 month target where we should actually bottom out through the balance of the year and quite possibly through the first quarter of next year. This is a level that could contain selling into spring, or once we test this, we could rotate higher again. If we close below 122.10, then the market has indicated. I'll do a little analysis here just to see. No, that's no good. I think then, and it would be something like this. If we close below 122.10 in the coming 3 to 5 months, then the next 5 to 8 months, full year of trade should then yield the 115 handle, which is an area that could, if tested, contain selling through 2020. But right now, all of that is a bit of a moot point. We do remain bullish really through the third quarter and into the fourth above 125.08. And this is what we're anticipating. How long this will take is actually anybody's guess. It looks to me like the next 3 to 5 months. With the Fed announcing, no more rate cuts, that we could actually reach this 131.10 level by the end of September or sooner. That's a real possibility. 131.10 is a significant overhead ceiling. It goes back to the 2012 highs. So it covers really 6, 7 years of activity. It can contain buying through 2020. And once tested, the market then prone to bearish rotation over the following year or two to the channel base and once again in the 115 handle. This is really a trend line right now, but if we tested the top of the channel, then it becomes a channel base in the 115 handle. So just know that once we test the 131 handle resistance, which is dropping a little bit, by the way, in September it's at 131.08, and in October it's at 131.05, if you want to make note of that, and in November it's at 131.03. And so, this is an area, as I said, that can contain buying through next year, but if we close the month of August, for instance, or any month coming up above this 131 handle resistance, the market maintains a decidedly bullish tone well into 2020. The move high of July 12, 135.15, then expected within 2 to 3 months. And in fact, over the next year or two, this 146.23 formation is attainable, actually would be expected. So 131.10, significant pivot point. This is your capitulation point. This is your fulcrum, really through next year. 131.10, a ceiling we're approaching, can absorb buying through 2020 and beyond. Yet if we close above it, maintains a bullish dynamic through 2020. And I think that's all that really needs to be said at this point in time.